So here in this first is previous year. And here current year. So they can ask you for 5 marks. Give the pro forma of changes in working capital. नहीं लगा? Statement. State. Give the pro forma of statement showing changes in working capital. It is asked for 5 marks. Only five marks question they can ask to you, not a big question they can ask to you. So for this, I told to you working capital. What is working capital? Current assets minus current liabilities, working capital. Firstly, we have to take here current assets here. Here current assets, A will be current assets. So in that current assets will be stock in trade. Stock in trade. Or it is called inventory, means stock. So previous year, current year will take here. Then you may take here changes, that is increase or decrease in working capital. Changes in working capital. Working capital. So we'll take here increase or decrease. Then after that, another will be debtors. Because you know current assets are inventories, debtors, then bills receivable, okay, prepaid expenses. So these are these things. So debtors, then bills receivable. Bills receivable. So here debtors increase in the last year and previous year. You may show here increase or decrease like this. Then prepaid expenses. Prepaid expenses. That is also previous year, current year, and you may show whether it is increase or decrease. Like that. Then after that, cash balance, like this, increase or decrease, and you take their bank balance. So ask for the 5 marks questions for this. Then you have to take here total of A, you can take here. Total of A, like this. The total of A, like this. Then you take here total here only. This total you take here. Don't take this total. Don't take this total now. This total you take total. Then B less B current liabilities. Current liabilities. Okay. In that current liability, you take their first will be sundry creditors. Sundry creditors. You take here like this. Then you take here increase or decrease. Then after that, bills payable will be there. Bills payable. Then increase, decrease. Then bank overdraft. Only it must take their current liabilities and current assets. So in that bills payable, bank overdraft you may take here in this connection. Now after this you may take here the total of B. The total of B you must take there. Then total of B, then you take here working capital. Working capital is equal to A minus B, means current assets minus current liabilities. That is current assets minus current liabilities. You'll get here. working capital get. Then out of that, increase in working capital. You may take that increase in working capital. Increase or decrease in working capital. Increase in working capital or decrease in working capital. In working capital. Like this. Then you take this total, it comes to total here now, which is correct one. This total, you must take that total. So here, increase or decrease you will take here, and this total will be tallies. Like that, they can ask you for, 5 marks questions. Give the pro formas. Give the pro formas of like this. So very simple here. First we take current assets. In that current assets, the list will be stock in trade, then debtors, bills receivable, bills, prepaid expenses, cash balance, bank balance. Then total of current assets. Huh? Huh? Like they asked, you have to prepare like this. You have to prepare like this, because they asked you give the pro formas of changes in working capital. So it comes in fund flows. Then ascertain changes in working capital. We'll take one problem there. Then we'll came to know how to prepare this. This is a format. So like that, there is one problem here. Just you see that changes in working capitals. Just see here. Here they are given on page number. Just see page number 170. Page number 170. It is asked for examination. Give the pro formas. Page number 170. Write down there. Give the pro formas of schedule of changes in working capital. Page number 170. 170 page. 170, 170, 66, 68. Now this is right here. This is our examination question. Give the pro formas of schedule of changes in working capital. Schedule of changes in working capital. It is asked for December 2019. Ask for 5 marks. Question number 4A. They can ask you. Question number 4A, December 19. They ask this question. For 5 marks. It is asked for 5 marks. Got it? Question number 4 for 5 marks. Now, just we'll see. This is the pro forma. With the help of that pro forma, we'll ascertain the changes in working capital here in this corrections. Changes in working capital. So just below that, after this 172 page. So here, this is the given. Just see. Following are the balance sheet of Akash Limited, Agra, as on 31st March 2013 and 31st March 2014. So they will give to you 21 or 21, 22, 23 like this. They will give to you. Got it? They will change this year. So from this, we have to prepare a schedule of statement showing in changes working capital. So how to prepare this? With the help of this format, I will show to you. Same things. Now for this, just we'll see here. First will be current assets. See here. Same thing. I will prepare this. First we have to take current assets from that ground. So here change, increase or decrease. Increase or decrease. Now like that we can prepare here like this. Year is given to you. We take here, year will be 2013, or you can take 31/3. 31/3 2014. Previous year and current year. You will just see. Then increase and decrease. So in this connection. So from this, which are the current assets then? Stock in trade or current asset. Just see. Asset side. See. On the asset side, stock in trades are current asset, trade debtors are current asset, and bank balance are current assets. Okay. We'll take these things. Take that now. So we'll take here. First will be A, current assets. Which are the current assets in that? Stock in trade. Stock in trade. Tell the amount there. Stock in trade, first one. Amount is given to you. How much? 14,900 and 14,900 and 17,000. How much? 17,700.
31st to March as current balance. This
is the previous year. Previous year last year. And this is the current year. You have to compare this for the current year. So it is increase. Correct? No, it is increase. Correct? Increase. If it is increased, write in the increase column amount. Correct? How much it is increased then?
14,900.
So it will be get you to
17,000 decrease.
Means it will be total. It comes to, just see, amount is given to you 14,900, 17,900. So it will be increase of 2,800. Correct? 2,800. So from this you deduct. Deduction. You will get there increase 2,800. Here dash. Then second item will be given here.
5,740.
Then sorry, I made mistake here. I think so.
First is 5,740.
No. I made mistake. Stock in trade will be 49,200. Correct? So just here, stock in trade is 49,200. So I'll change this here. What is this? This is will be debtors. It is trade debtors. It is trade debtors. Then you take their stock in trade. How much stock in trade? The amount is 49,200 and next is 42,700. So as compare you, it is decrease. This is increase, but this is decrease. Then you write in the decrease column. Means you compare for the last year to the current year. So last year is 14,900, current year is 17,000. It is increased, no?
First increase 14,900.
Correct. It is increased.
Decrease 17,700.
Not like that. You take the figure first. What is the first figure? 14,900 is stock in trade in the last year. What is the stock in trade in the current year is 17,700. Means stock is increased. Stock is increased. Right in the increase column. 2,800 is increased. So like this now, 14,200 and 42,700. Always compare with the current years. So it will be decrease. Correct? So how much decrease it is? So you will get there a decrease of 6,500. Take this, use the calculator. 6,500 will be decrease. Got it? Then third will be bank balance. You take their bank balance. Bank balance. How much bank balance? 9,000 and 7,800. 9,000 and 7,000. Once again, it is also decrease. As compared to it is decrease. Correct? How much it is decrease then? Just we'll see. That is 2,000, 1,200. It is decreased by 1,200. Minus. Deduct this minus. You will get that 1,200. Then these are the only three current assets here. Now take this total of A. Total of A. So like that, they will give you a balance sheet and ask the calculate changes in working capital for 5 months. Problem like this. Got it? Then you take these total only. What is this total is 0, 0, 7, 7, 14 and 22 carries 2, 9 and 11 and 18 carries 1, 5, 6, 68, 200. Correct? It is correct, no? 68, 200 and 73,100 is the first. Got it? Now, less B current liabilities. Less B is current liabilities. Then current liabilities, you'll see in the current means liability side. There is bills payable, then trade creditors. These are the only two current liabilities.
Payable, trade creditor.
Bills payable and trade creditors. These are the,
Payable 11,000.
just see. First is bills payable, take there. Tell the amount of bills payable for the previous year. Amount is last year's. It is given to you. Bills payable 11,360. 11,360. And here, how much? 11,360. Then it is coming to you
11,000.
840. 11,840. Actually, just see, it is increased. As compared to it increased. But you write this amount in decrease column. Liability will be opposite of increase. Means actually it is increase. But you write this amount in decrease column.
Both minus.
Means it will be coming here. How much you will get there here? It is increased. Just see, 11,840 minus 11,360. 0 from 14,6 8 remain, carries 1, 4, 1, 4 remain. 480. Correct? So right here 480. 480. Decrease column. Then next is trade creditors. Trade creditors. So trade creditors. How much trade creditors is going to you? Trade creditors is 5,740. 5,740. The next is 6,360. 6,360. 6,360. Got it? Now just see. It is also increased. It is also increased. But you have to write in decrease column. So how much it will be? See, it comes in the decrease column. 6,360 minus 5,740. 0, 2, 6, 7, no? Carries 1.
620.
There only 620. So it comes to 620. So what in this balance sheet? Two balance sheet is given to you. In that two balance sheet, what we have to done there? Just we have to take into consideration here. The first is current assets. In that current assets will be trade debtors, stock and bank balance. Here current liability will be bills payable and trade creditors. Okay, now we'll take the total of B here. Total of B. Total of B you take here. This total of B will be 0, 10 carries 1, 4 and 12 carries 1, 7 and 1, 8 and 18,200. This will be 0, 6, 10 carries 1, 8 and 3, 11 carries 1, 6 and 1, 6, 1, 7. 17,000, just see. Got it correctly? 17,100 and 18,200. Then you take here working capital. Working capital. A minus B. A minus B. 73,000 you deduct this. Baga. 17,000 means it will 0, 0, 0. 6, 7, 6 carries 1. Carries 1, 2 gone, 5, 56,000. It comes to 56,000. Correct? So you will get there 56,000, and this will be from this 0, 0, 0, from 0 there, and 50,000.
This is a minus.
No, not from this 68,200, 18,200 deducted. A minus B. A is total minus B is total.
73,000.
73,100 minus 1,700. You will get here 56,000. Got it?
Yes.
Then next is like that. 68,200 minus 18,200. You will get 50,000. Then you have to balance these things. How to balance now? Just see here. Which is a heavier balance? 56 is heavier. You take here 56 both side. And here 56. You'll get a balance here 6,000. You'll get a balance there 6,000. So it is nothing but decrease in working capital. If you get the balance in the second column, it is decrease in working capital. If you get a balance in first column, increase in working capital. So it is decrease in working capital. Decrease in working capital. Dash. Then it comes to here 6,000. 6,000. Decrease comes here. Otherwise, you can take this total, you will get that balancing theory 6,000 here. See, first is 0, 10 carries 1, 7, 11, 13 and 18. It comes to 18. Carries 1, 2, 2 and 6, 8. 8,800. 8,800. Just see. From 8,800, if we deduct 2,800, you will get the balance 6,000. 6,000. This is called changes in working capital. And for this, if you do it correctly, you will get 5 marks. They can ask you, prepare a schedule of changes in working capital. So first you have to take here previous year, current year, changes in working capital, increase, decrease. So first will be current assets, and all the current assets you must take on the asset side, and less will be current liability on the liability side. And from that current asset, previous years and current years, you can compare this. So for asset increase mean write increase column. Correct? For liability decrease mean write is increase column. If it is increase, write in decrease column. Now what you have to take the total of A, total of B. A minus B, you will get working capital. And you can balance this, which is heavier, put this on both sides. So this 56,000 here, you will get a balance 6,000. If you get balance on the second column, it is nothing but decrease in working capital. It is decrease in working capital. Then you have to take the changes in working capital also there. So this total will be 8,800. From this 2,800 gone, you will get the balance 6,600. Or ultimately this will be comes here, and you can get this total there. And that is called, that is changes in working capital schedule. Got it? So now we'll see. This is called the changes in working capital. Got it? So it is comes in fund flow statement. Fund flows. It is not question paper. It is notes on it. This is asked like this. I'll prepare this notes. They can ask to you like that. You can later on, you can take on photo on this. Now we'll see what is the meaning of fund flow statement. Fund flow statement and advantages. They can ask you a question. Fund flow statement, cash flow statement, ratio analysis. These are the technical tools which helps the management to take the decisions. Got it? So like that. Now this is the means problematic things here. Out of 5 things, they will give one problem for 5 marks like this. Got it? Otherwise, theory they can ask you. So if there is a fund flows, what is the theory on this? Advantages of fund flows or disadvantages of fund flows?
Both
Different. Means because 5 marks will be there. Now it is not a big question. Advantages and disadvantages. Fund flows. Then cash flow is there. Advantages, disadvantages. And they can ask to you one problem for this. Okay. Now we'll see here. First will be fund flow statement. What is the meaning of fund flow statement?
full year. Year for the statement.
Not a statement it is. A theoretical portion they can ask you. What is the meaning of fund flow statement? In fund flow statement, we have to ascertain this. Statement should,
Current.
current assets minus current liability, we can ascertain their changes in working capital days. Means ascertain increase or decrease in working capital. In this format, in this problem, we'll get there decrease in working capital. Now we'll see, explain the fund flows statement. Explain the advantages of fund flow statement. First, before that, I will give to you what is the meaning of fund flow statement. So here, it is one of the tools to the management, which helps a lot to you to take the decision. So for that, how many sources are there and how that source can be applied here, means how much funds available with you, and that funds, how much it comes by means of which source that funds is coming, you have to show there. And after coming that funds, how you have to apply that funds, application of funds. Say for example, sources of fund will be, it give the exact idea regarding the funds of the particular company. How much funds is there? For the particular company, it is required for fund flow statement. Correct? Then for showing that fund flow statement, source of this, what are the sources there? Sources of fund. Sources of fund will be issue of shares. If you issue the shares, you will get a source. Then issue of share capital, you will get the source. Then issue of debenture, you will get the funds for this. Loan taken, you will get this fund. So these are the source. Then how you utilize that funds, how you make the application of this fund. So from that funds, you will purchase the building. Correct? You purchase the building. If you sell the building, you will get a source by means of sale of building. Correct? Sale of furniture, sale of building, then issue of shares, issue of debenture, loan taken. These are the main source to you. Means with the help of these funds is coming. And how you can utilize that funds? You can utilize that fund by purchase of building. Correct? By payment of salaries, by payment of dividend, then payment of income tax. Correct? So all these things can be applied. Application is made. And this is nothing but it can show the how much fund available with the company, and for this they can prepare the fund flow statement here in this case. Now we'll see what are the advantages for this. Advantages of fund flow statement. First advantages is given to you, so you can see that in your fund flow statement. Where is that fund flows? Fund flow statement. Correct? You will get there. The advantages will be there. Just see. First will be financial tool. Is there any financial tools? Advantages? Advantages. Financial tools is there. Just see where it is.
Fund flow statement beginning with the tools of financial analysis by the management.
Right there, financial tools. This is the point. How you have to write in the examination? Don't write like this. You have to write like this. See, financial tools. Then you can go on making explanation. The fund flow statement is being used to the total financial analysis by the management. It can be helps to the management, bankers, financial institution, investors, and other parties. So it is useful for the bankers, management, then it is useful for the financial institution and investment and the other parties. Then second, control device. Second is control devices. Is there? Control devices. See. Control devices. Correct?
Make the financial.
Just see. So fund flow statement can be used as a control devices to the management. It is used as a control devices to make the financial planning more effective. Correct? So in that point you have to take, what is the point is, write down there, control device. Got it? Write down this, control device. Then you have to explain this. In this manner, a fund flow statement can be used as a control devices to make the financial planning more effective. This is the second thing. Third now, investment plan. It is investment plan. The potential shareholders can also form an idea about the financial health of an organization from the study of fund flow statement and take the decision about their investment. Means management can take the decision regarding their funds and take the decision about the investment, whether to invest their money, whether their fund is invested by making some activities there like this. Then fourth will be liquid position. Liquid position means with the help of fund flow statement, we can ascertain the liquid position. Liquid position. See, a study of fund flow statement clearly tells about the liquid position of the organization. Liquid position means how much liquidity is with you. Liquid means how much cash. How much cash with is liquidity. So it can give the ideas. Fund flow statement give the ideas how much liquid position of the organization or liquid position of the business. It can give the ideas. Then fifth will be effective test. Effective test. So fund flow statement is a test of effective use in working capital management in a particular period of time. So it is very effective mode. It is the effective use or mode to ascertaining the working capital. It is the effective mode of ascertainment of working capital. This gives to you. Then sixth will be helps to fund statement. So the next advantages, six advantages is helps to fund statement. With the help of fund statement, financial manager can ensure that business will have the funds when it is required. Whenever business requires the funds, it can help by giving this fund. This is the availability of the fund. So this is very useful. Then more accurately. So it shows the liquid position of the business more accurately. It shows the liquid position of the business more accurately. So therefore more accurately or more accuracy. Then it will be creditworthiness. Means it also indicates what is the overall creditworthiness of the enterprises. How much creditworthiness is there, and it can help to you how much creditworthiness of the enterprises is there. You can ascertain creditworthiness. The next is term financial problems. So number 9 is financial problem. So this is an important and useful tools to the management for which we can throw a light of many financial problems. So with the help of this thing, how much financial problem is there, it can be ascertained very easily. So this is the advantageous thing. And the last one, term loans. Here, with the help of funds flow statement, financial institution easily can get the term loans. So you have to prepare the financial statement, easily fund flow statement perfectly, then bank will immediately sanction you the term loan there. So these are the 10 advantages. So if you write 10 in numbers, because they can ask you 5 marks, minimum requirement is 5, but if you write like this in this manner, you will get full 5 out of 5 marks. Got it? So in this manner, we have to prepare these things. Then now we'll see what are the limitation of fund flow statement. Limitations, drawbacks, disadvantages, demerits. Correct? Limitation, drawbacks, demerits. It is also called cons and cause also. Advantages, disadvantages. Correct? So now we'll see what are the demerits of these things. What are the disadvantages of fund flow statement? First will be based on information. Based on information. So it is based on information contained in the traditional final account. Correct? So it is based on information. The information is available, then you can correctly done it. It is totally based on information. If you are not prepared that information, we can't get these things here. Therefore, it is based on information contained in the traditional final account. Traditional final account means trading account, profit and loss account, and balance sheet. We have to preparing for this in this manner. If you get the information, so based on the information. Second, cannot replace. So fund flow statement cannot be replaced in traditional final statement. It cannot be replaced. It cannot be transferred there. So it is a drawback for them. Then third will be not reveals. Not reveals means a fund flow statement is not as much revealing as balance sheet. CJC. Fund flow statement means just is give the ideas regarding the funds. Means it is not that much information is given to you. But balance sheet, what you will get that? Balance sheet give the correct ideas regarding the financial position of the concern. How much asset with them, how much liability with them. It gives the exactness idea regarding the financial position of the concern. Therefore, it is not complete reveals, so not given the correct exact ideas as per balance sheet like this they are given. Then next is components of cash. So it is argued that the components of cash is more important than working capital because it is cash and not other the components stock receivable which is required to pay off the liabilities of the concerns. So just see component of cash. So here components means it is an element of cash required because it in current assets, cash in hand, cash and bank. So it must be there. Without this, we cannot mitigate the liabilities. We cannot pay the liabilities. So therefore, it must required. So like this, they are given to you, component of cash. Then fifth, not significant. Fifth is not significant. In fund flow statement, as liability side depicts the source from which funds generate, and asset side shows how it can be applied or how application is made. So that's why it is the fund flow statement is not a significant things. So like this. Okay. So this is as per 5 marks also. Not completely, just see. Give the limitation of fund flow statement. Give the limitations. So if you see the question paper, so you will get there. They will give to you the question paper also here like that. Explain the role of accounting. No, but it is there. Old question papers are there. Just will see. Got it. So here, these are the advantages and disadvantages. We'll see now. Now we'll see the cash flow statement. Now, just see. Another statement is that cash flow statement. So we can ascertain fund flow statement by preparation of trading account, profit and loss account, and balance sheet. But it just will give the exact idea regarding the funds. Fund flow statement give the ideas regarding the funds availability. What are the sources of fund and what are the application of funds is given to you. Regarding that here, cash flow statement give the exact idea regarding the cash. Then for that, sources of cash. Cash source will be inflows and outflows. How cash is incoming and how cash is outgoing. Exact idea regarding the cash. By giving the exact idea regarding the inflows of cash and outflows of cash, we have to prepare cash flow statement there. We have to prepare cash flow statement to ascertain the exact cash balance. Exact cash balance. Got it? Fund flow statement we have to prepare to ascertaining exact funds available. What are the sources of fund? What are the application of funds? So like that here, we have to use the sources of cash. How cash is incoming and how cash is outgoing. Got it? Regarding the cash, therefore we have to prepare the cash flow statement. By preparation of this cash flow statement, we are to making three activities. Which is that activities? First will be operating activities. Operating activities being by making operations. By making some adjustment, we can ascertain the funds there. Cash we can ascertain. For example, if there is a fixed asset, by charging fixed asset, we can ascertain the correct true and fair value of the asset. Correct? Because each and every fixed asset is depreciated. So we'll make the operation by charging depreciation. This operation, charge depreciation operation. By making charging operation, we have to ascertain the profit, and that profit is called operating profit by making some operations. Another is investing activities. First activity is operating activities. In cash flow statement, we have to making three activities. First is operating activities. Correct? By making operation, how cash is coming. By making operation, how cash is going. Got it? Then another things will be, we can go on making there. In that operation, what will be there? Once again, just see. Operation will be increase in current asset, decrease in current liabilities. Correct? Increase in current asset, decrease in current liability. Then decrease in current liabilities, increase in current liabilities, like that. So by this making operation also, increase and decrease both. Then we have to ascertain their cash. This is operation. Cash,
Like the cycle.
correct, like the cycle, means cash derived from the operating activities, availability of cash from making operation. Then another is investing activities. Investing activities means by making some investment, you have got the investing activities. So investment means what is the investing activities? Investment made means purchase of asset. While purchasing asset,
Invest.
invest, cash is outflows. If you sell that asset, cash inflows, cash is coming. Correct?
Sales. Okay.
Purchase of sales, purchase of asset, and purchase like that. So this is called the investing activities. Purchase of building, sale of building, purchase of furniture, sale of furniture. By making this, making investment, correct? Or so in that investment also, we can go on making payment of income tax, payment of dividend, correct? Make a provision of dividend also. So make the investment. So we can got the cash by making investment activities. Then third will be financing activities. How that financing activities can be made? Three types. First is operating activities, next is investing activities, and third is financing activities. So now just see what is the meaning of financing activities. I'll tell to you. Financing activities, I tell to you. Just see. What is the meaning of financing activities? By finance, by making finance. Finance means, so in that finance, source will be there. Means inflows will be there and outflows there. For each and every activities, inflows and outflows will be there. Operating inflows, outflows. Investing activities, inflows, outflows. So then how that investing activity, cash is incoming? Sale of land coming. Sale of furniture, cash coming. Inflows, cash is inflows. If you purchase main, cash is outflows. Purchase of purchase of land, purchase of furniture, purchase of laptop, purchase of computer. So it will be, cash will be going outflows. Making payment of dividend, payment of income tax, cash outflows will be there. So now financing activities. So in financing activities, how finance is coming? For example, issue of shares. If you issue shares, cash is coming. Issue of debenture, cash is coming. Loan taking, cash is coming. Correct? And after that, how cash is outflowing? Repayment of loan, redemption of debenture, then repayment of share capital. By this, it can be ascertaining financial activities. And at the end, you will get cash and cash equivalent. So we can prepare cash flow statement to ascertainment cash and cash equivalent. Cash and cash equivalent means cash in hand and cash at bank. How much opening cash balance and bank balance? How much closing cash and bank balance with you? So with the help of preparation of this cash flow statement by following accounting standard, we have to ascertain the cash flow statement. Got it? So they will ask you. Then we'll see what is the advantages of this thing. Advantages of cash flow. So just see. They will ask you fund flow advantages, disadvantages. Like that, cash flow advantages, disadvantages. So they are not given here. Advantages is not given here. Correct? So with the help of limitation or they are given. Then advantages of fund flow statement is there. Now we'll see the cash flows. So in that cash flow, just see here. What is the advantages of cash flow statement? Advantages. Just see. The advantages of cash flow statement, it is given in 18 numbers. 18 numbers. It is not given. Now first advantages. You take any one of this page in cash flows. Or take here advantages. Cash flow it is no? Correct. You take there advantages of cash flow. Here. You take advantages of cash flow. Advantages.
Cash flow.
Or the importance or advantages of cash flow statement. Correct? Importance or advantages. Merits. Correct? Now, first will be helping in planning and coordinating. The first and foremost advantages for cash flow is it can help you to making planning and coordination. Coordinating means helping, planning and coordinating. Planning and coordinating. First. Second, helps in controlling. It can help you to control the cash. Helps in controlling of cash. Helps in controlling of cash, because cash flow statement is nothing but cash and cash equivalent. Cash and cash equivalent means cash in hand and cash at bank. So that can be taken into consideration there. Then third will be helps in internal financial management. To make the internal financial thing there, internally financial management helps in to making internal financial management. Then next is knowledge of cash position. So cash flow statement gives the knowledge of cash position. How much, what is the position of cash? How much cash is incoming? How much cash is outgoing? Means cash position is given to you. Then next number is given to you, helps in short-term financial decisions. So cash will be useful for short-term financial position, because there are some short things we have to make the cash payment for this thing. So it helps you to short-term financial position. Helps you. The next will be so they are given to you. Next will be it helps to report to the management. It helps you to giving report to the management regarding the cash, availability of cash. It helps you to give the ideas, helps you to give the report to the management and give the ideas regarding the cash. Ideas regarding the cash. And next will be it helps you in changing the financial position of cash. Next is it helps you changing the financial position of the cash. Helps you changing the financial position of the cash. Help you changing the financial position of the cash. And lastly, it helps you in reporting to the management. And lastly, it helps you to reporting to the management. Reporting to the management. So now just see, these are the things they are given to us, the advantages, which is not given in your books. So it is not given in your book, but they can ask you, explain the advantages of fund flow statement. Now we'll see. So these, just see up to this moment what you have to considering. Now we'll see. Fund flows were completed. Fund flows. Advantages. Disadvantages. Number A. Now B will be cash flow statement. Huh? What is it? Disadvantage. The name is here merits also, it is called merits. Here drawbacks. Drawbacks, or it is also called limitations. Limitations. Advantages, merits, they merits. Or drawbacks. It is also called demerits also. Then cash flow, in that also advantages. Disadvantages. Now we'll see demerits of cash flow statement. So what is the demerits? Now we'll just see. They're given in the here page number 197. Just see that page number 197. What are limitations or drawbacks? Limitations or drawbacks. Advantages is 9 in number, correct? It is 9 in number. Now it is just we'll see disadvantages is given to you 6 in number. It is 6 in number. So for this cash flow limitations, now we'll see explain the limitation of fund flows. Fund flows is over, then cash flow we'll see. So first and foremost will be, so it will be disclosed by cash inflow statement. First drawback is disclosed by cash unless and until or to disclose your cash balance, cash and cash equivalent. So first you have to prepare this statement. Then this is the thing they are given. The cash balance is disclosed by cash flow statement may not represent the real liquid position. It not give the liquid position for you. Liquidity is not given to you. How much liquid position is there? Liquid means how much availability of cash. It will not give the exact idea for this. Then second they are given to you,
Yes.
cannot replace income statement. It cannot be replaced in income statement. Cannot replace in income statement is a drawback. Income statement means, trading account, profit and loss account, balance sheet. These are the income statement. Correct? So this cash flow statement cannot be replaced, cannot be converted into income statement. But it not replaced into income statement, it is once again drawback for you. They are given cash flow statement cannot replace the income statement or fund flow statement. Each of them is a separate function by performance. Means that is fund flow statement is a different functions. Cash flow statement is different function. From by making the fund flow statement, just we have to see the availability of funds. For cash, we have to see that how much availability of cash there, or what you can say their cash and cash equivalent position. So different things. Therefore, cash flow statement cannot be replaced to fund flow state. It cannot be replaced to income statement. Next, third thing they are given to you. So
Equivalent.
that is they are given to you cannot be equated with income statement once again. It cannot be compared, cannot be equated.
Equipment.
Correct. So it is given to you cash flow statement cannot be equated with the income statement, and income statement takes into account both cash as well as non-cash item here. So just see, in income statement we can take cash as well as non-cash item. What is the cash item means? Payment of dividend, rent paid, correct? These are non-cash item will be depreciation, correct? By charging depreciation, it is a non-cash item. So both are recorded there, but here it is not like this. Therefore, not be equated with this thing in both as well as non-cash item, and therefore net cash flow does not necessarily mean the income statement. So if you prepare this cash flow statement, it does not mean to income statement, because both they are giving income statement. We write cash as well as non-cash item also, we can record it there and ascertain the net profit by preparation of this thing, trading account, profit and loss account, all this thing. So therefore this is the next things. Then number 4 they are given to you cash flow statement comparison of original forecast and actuals highlights the trends and move of cash, otherwise go to the understated. Mean comparison. So this cash flow statement cannot be comparison with the original best these things. So therefore, not being compared. If make one comparison, so cannot be completely comparison and ascertain the result there. Therefore, once again drawbacks there. Then last number, these are the four things they are given to you. Got it? These are the fourth thing. Therefore, the concept of cash flow statement be understood with the help of the following illustration. Just we'll see there. Illustration we'll see now. I told you there are three types of activities. Correct? There are three types of activities. So how to prepare cash and cash equivalent? You want page number next page number 198. Just see the page number 198. Got it?
Yes.
Now just see here how to prepare in the books of they are given Activa Limited. See particulars as on. First they are given to you asset,
Yes, sir.
cash in hand, then current accounts, balance, Union Bank, marketable securities, short term, fixed deposit, Indian Bank, correct? And less liabilities, overdraft banks, cash, credit, Bank of Maharashtra, short term loan from the Bank of India, correct? Like this. From this, how to ascertain these things? So they are given the list like this. They will give like this. Just say, please. First part you have to do, you have to take this year. 31/3/2013 and 31/3/2. It is asked for 5 marks. Prepare a cash and cash equivalent. Just see. How to prepare cash and cash equivalent. So in this, you don't take cash and bank. Correct? Then you take here. First you take asset. Which is the first asset they are taken there? Cash in hand. Just see. Cash in hand 3,600, 2,400. Just see. They are taken here. Asset. Cash in hand 3,600, 2,400.
Okay.
Got it?
Yes, sir.
Then next is current accounts Union Bank. So just see current accounts Union Bank is given to you. Bank overdraft is a liability.
Okay.
Correct? It is liability shown. Bank overdraft liability. Just see. It is shown on the liability side. First you take asset. Cash in hand is asset. Then bank overdraft is a liability. It can show the liabilities. Then next is current accounts Union Bank. Comes here. Current account Union Bank's asset. Then next is given to you cash credit Bank of Maharashtra. Cash credit Bank of Maharashtra. It is a liability. Because you have taken the credit there from the credit taken from the Bank of Maharashtra. It is a liability. So comes on the liability side. Correct? Then fixed deposit Indian Bank. It is an asset to you. Fixed deposit.
Laboriously short term.
Correct. Then you can take there fixed deposit. You don't take to fixed deposit in Indian Bank will be the asset here. Just see they are taken fixed deposit. Then after that they are given to you marketable securities short term. That is also asset. Marketable securities. Asset. Got it? Then short term loan from Bank of India. Liability. Okay. Now what we have to do? We must take all these total first. So total is 50,000. Just see. First asset total 50 and next is 40. 40,000. Then you take the liabilities also. The first total liability 30,000. Next is 25. Then from this you deduct. You will get there cash and cash equivalent.
20 to 50.
50,000 minus 30,000. You will get there 20,000 cash equivalent. Got it? And here 40,000 minus 25,000, 15,000 cash equivalent. Minus, correct? Like this. So this is the statement you have to prepare. Prepare cash and cash equivalent. Such types of item they will give to you. First you take their first asset, then liabilities. Total of asset less total of liabilities, you will get their cash and cash equivalent. Got it? Such types of 5 marks problem they can ask by giving such types of item. Not a big problem they cannot ask you. Okay. Then they can ask you prepare from the following information from the following operating activities undertake during the year 2014. Calculate net cash flow from operating activities. Operating activities. Okay. By making operation, cash flow statement you have to prepare. Got it? These are the items they are given. Got it? These are the items. Which is the item? Payment towards overhead. From this you see there which are cash inflows and which are cash outflows. First you take cash inflows, less cash outflows. Correct? So from these cash inflows means just see, first we'll take that. First here cash inflows, then cash outflows.
Two column.
Two column we have to prepare. Correct? Because they are given to only 1 year figures. Only 1 year figures given. Got it? Now we'll see. Payment of works overhead means it is expense. Outflows, cash will be going. See, payment of overworks. This is the first thing. Outflows, cash is going to that extent. Payment of works overhead. Overhead means expenses. Expense it is. So it is cash outflows. The next is given to you income tax paid. Once again the expense. Just see, they are shown here. Income tax paid. Payment of income tax. It is an expense. Then wages to managerial staff. Expense it is. Wages to managerial staff is also expenses. Wages to managerial staff being expenses. Then next is rent to factory shop, workshop. Expense. Expense it is. Correct? Then next is sales commission paid.
Income tax.
Sale commission paid. It is also expenses. Expense it is. Then commission on trading activities received. Income it is.
Income.
It is received. Income. Just see here. Commission received. Income. What you have to do here? First you write here cash inflows. How cash is coming and how cash is going out. This is called operating activities. Inflows of cash and outflows of cash. Now we'll take all these inflows. In that inflows, we'll get there refund of tax 10,000. Refund of tax means tax is refunded there.
Income tax.
Refund of income tax. So it will be coming in the last year here. Here it is coming. Income tax. In that we can deduct the refund. Correct? Refund. Then next is, just we'll see there, taxes on business premises. Expenses it is. The next is turnover of cash. Turnover of cash means it is income for us. This is just say turnover of cash. Income. Then next is they are given to you distribution on cost. It is an expense going on the expenses side. The next is insurance claim received. Claim received means it is income. Just see. Claim received. It is an income shown on the income side. Insurance claim received. Then next is
Payment of administration of cost.
payment means it is an expenses. Expense. Then salary to production staff. Expense it is. Then periodic payment to the credit suppliers. Expense. Payment. Then collection from credit customers. It is an income. Received. Income it is. Means it is inflows. Income means inflows. And expenses mean outflows. And royalties received. Income once again. Got it? Then what you have to take? The total list. First will be inflows. Turnover of cash. Then collection from customers. Commission on trading activities 39,000 and royalty received 20 lakhs. So this is cash incoming on this account. So this is the operating activities. Then expenses will be coming there 5,21,000. Total of the expenses. Then you will get cash from operation before tax 14,79,000. From this you deduct this expense. So these are the expenses you are deduct. Then you will get their profit here. Income less income tax is 3,79,000 paid there. 3,79,000 income paid. Then tax less refund 3,89,000 less 10,000. You have to deduct this. Refund is there. Then this is also mentioning all these things. Then you will get here 1 lakh, 11 lakh, and add insurance claim received. Insurance claim is received to you.
2,70,000.
Correct. So these are the
2,70,000.
correct. This is the cash from operating activities. Got it? So like that now. One more problem they are given to you. Just see here. That is net cash flow from investing activities. Just see investing activities. I told to you three activities. First is operating. That is all. Then investing now. And lastly financing. Correct? So now just see investing activities. So investing means invest. Just see. What is there? Purchase of asset, purchase of asset, sale of asset. Now just see, there are 2 years given. Just see here. Furniture and pictures. First year 1,12,000. Correct? Next year 1,40,000. Means it is extra. Then it is purchase is made. Purchase of furniture. Got it? Difference. Extra you are taken. So this is the last year. Now it is increased. Means again you have to purchase furniture. While purchasing, cash is outgoing. Correct? Means it will be going just see here. Purchase of furniture and pictures. Difference you take there. 28,000 difference. So see here. 1,12,000
1,40,000.
minus 1,12,000.
1,28,000.
No. Here. You take this difference. This 20,000. So therefore, purchase of furniture coming here, cash outflows.
28,000.
So due to purchases, cash is going. So how much cash going? 28,000.
28,000.
You compare this,
Okay.
whether it is reduced or increased. Then next is 6% investment. It is reduced. Just see.
Investment in sale.
Investment in sales, but reduce it is.
The 3,20,000
Ah.
minus 2,82,000.
It is reduced.
Corporate purchase.
Cash is incoming. That is. Just see, cash is incoming. There is a difference of how much? 38,000. Take this difference.
38,000. This for investment.
This you can take. This investment. Difference is 38.
38.
To that extent, cash is incoming.
Minus, no,
Huh?
sir. 20,000 minus 2,82,000.
Correct.
Uh,
You will get there.
Dispose the 6% investment in sale, 38,000.
Correct. See, just see. Disposal of 6% investment, 38,000. So cash is coming. Correct. Then next, copyright increase
27,000.
27 and 39. It is increase. Means outflows. Cash is going. Just see. Copyright purchase.
12,000 purchase.
Again you have to purchase, no? To that extent, cash is going.
Minus is there.
Correct. So just see. While purchasing, cash is going. Selling, cash is coming. Got it? Then the next, plant. Plant is increase. Just see.
2,40,000.
3 lakh, 60,000 increase. Means purchase of plant. Just see.
60,000.
60,000. Got it? Then next, building. Building decrease.
4,19,000 and 2,50,000.
Sale of building now.
Building of, yes,
Sale of building.
share of building.
Correct.
1,63,000.
Correct. Difference you take. Because by selling, cash is coming.
Selling in cash.
Cash is coming.
Sales and cash.
Sales means cash come, no?
And cash came.
Sales and cash made. Correct. Cash is coming to that extent here, coming in the inflows. Then next is motor vehicles. Sale also.
1,86,000.
It is sale of motor vehicle.
Value 1,20,000.
Less.
Minus.
So it will be, what is this? Sale, disposal of motor vehicle.
66,000.
विकलं ना, कमी झालं. करेक्ट.
काय sir?
कमी झाल्यामुळे कॅश इज इनकमिंग.
Value त्याचं 66,000.
कमी झालं. Difference you take there. Okay. Now after this, cash dividend received on sales on investment is 20,000. So it is incoming, cash coming, cash received. No. Here. Cash received here something here, no? Cash received, this, just see.
Investment.
Okay?
Invested.
Invested.
20,000.
Then you take this total. This will be coming, and this is the cash is going. From this you deduct, you will get there
Like 20.
cash from investing
Both are
activity.
minus.
Cash, cash from investing activities.
A and B.
Got it? Then lastly, we'll see their financing activities. Just see here. Out of the three, they can ask you one problem. Ascertain cash from operating activities. Correct? Ascertain cash from financing activities. Ascertain cash from investing activities. Correct? Now see. This is also same thing. First you take inflows, then outflows. So see, equity share. So
Capital.
share capital. See, increase it is.
So, thank you. 3,50,000 minus 620.
Ah, increase means what you have to done there.
2,70,000.
Means by issuing cash is coming.
Cash and coming and
Cash coming here. So Jeff, first 3,50,620 you got. Means 2,70,000 cash is coming by disposing, selling. Got it? So here just see. Cash proceeds from issue of securities. Difference you take here. The next, say 8% mortgage loan. It is reduced, just see. 180, 120 means they paid here. Payment made. Just see. Repayment of mortgage loan.
what is the mortgage?
Mortgage loan means you, if you go to the bank and ask the want the loan without any mortgage, they will not give the.
Property and mortgage.
You have to mortgage your property there without giving anything, mortgaging. They will not give the loan, no.
Mortgage means
मॉर्गेज म्हणजे महाल घाल द्यायला पाहिजे त्यांना. कर्ज घ्यायचं असेल तर आपण काय करतो, त्यांना प्रॉपर्टी देतो ना,
काहीतरी द्यायला
काय ते द्यायला पाहिजे, सिक्युरिटी पाहिजे. तसं आहे. मग काय झालंय, 8% मॉर्गेज डिबेंचर आहे, 1,80,000 आहे, बट इट रिड्यूस टू 128. रिड्यूस मीन्स पेमेंट मेड, जस्ट रीपेमेंट ऑफ मॉर्गेज लोन. Correct? Then next is government bonds. Just see what is the thing here. Government is long-term borrowings from banks. Your borrowed money, cash is coming. Just see, long-term borrowings, cash is incoming.
1,60,000.
You taken a loan from bank. To that extent, cash is coming. Long-term it is.
With interest will be loan taken.
Oh, there will be interest to be there.
25 lakhs suppose
Hmm.
you take loan
Hmm.
for 15 years.
Hmm.
How much EMI comes up?
It depends upon their.
Salary is paying 30,000.
Hmm. No, it depends upon their rate of interest.
6.9%.
6.9. If you keep in the table, there is a table. In the table you will get there installment plus interest. Table is there, no? Bank has got the table there. 9% table, how much you are giving there? Because long term means it is more than 10 years. More than 5 years is long term.
No. 15 years, 15 years, EMI will be cost high.
I know. If it 20 means little less.
Interest.
But we have to, if people long term means you taking loan means you have to pay more amount of interest for them.
Double will be taken.
Double will be it will become like this.
20 lakhs about 20 lakhs.
20 lakhs, like that it comes to. But it now just see here. They are taken long term means 1,60,000 cash is coming. Cash coming, correct?
Yes.
Then next is government bonds. Once again they purchase the government bonds. Just see. Increase.
Increase government bonds.
Government bonds.
3,75,000, 4,50,000. Minus
Minus you have to do this. Cash issue from government bonds 75,000. Cash is coming to that extent. By issuing cash is coming. This, got it? Then after that 6% redeemable preference share capital. 6% redeemable preference share capital. Just see. It is 2,10,175. It is reduced. Repayment made. It is repaid.
It is a share capital, 35,000.
Just go on comparing here. Here only. Don't go here. Yes, see. Equity shares mean this thing now. Government bonds, this is coming. Government bonds means it is coming here. Cash coming.
Okay.
Then 6% repayment reduce means you have make repayment. Redemption. Just see. Repayment of redemption of 6% preferences. Paid money. Cash is going. Outflows. The next is underwriting of commission issue of shares. 320,000. So it will be credit like this. Then this total, deduct this, you will get their cash flow from financing activities. Got it? So like this. Then after that we'll see fund flow statement is what. Today we are going to deal fund flow statement, changes, advantages, disadvantages, cash flow, advantages, disadvantages, and problematic also. Theory problem we have completed, both topic. Got it? So they can ask you, find out cash and cash equivalent by operating activities. Operating activity means what we have to take first? Income, inflows, and expenses, outflows. Then investing means purchase of asset, sale of asset. By selling, cash is incoming. Purchasing, cash is going, like that. Means this is the total inflows minus outflows. Then now this is the financing activities. By issuing the shares, issuing the venture, taking loan, cash is incoming and cash is outgoing. Out of these three, they can ask you one activity is find out these things. Finance, operating, financing, investing activities. Okay, you got this? You followed this? How to calculate this thing? Just see. Anybody, any doubt has you got no? You may take my phone number there. You take your phone number 9420159426. WhatsApp same number. Immediately I will answer you. So it is a difference like this. Notes I will take this thing. Take jokes. Okay. Now we'll see ratio analysis. We'll see ratios. Ratio analysis. Where is the ratio analysis there? Just we'll see here. Page number ratio analysis. Page number 109. Ratio analysis. Here also theory questions and problem one. Correct? They can ask you problem by current assets, liquid assets, net profit ratio, gross profit ratio, operating ratio. Like that they can ask. Finance. Correct. So they can give to you ratio. Now we'll see what is the meaning of ratio. Here also they can ask the question. What are the advantages of ratio analysis? What are the disadvantages of ratio analysis? Limitations like that they can ask. So what is the meaning of first ratio? We'll see. First meaning of ratios we'll see. So the ratio is calculated by dividing one figure to the other figure. Ratio can be, it is a mathematical number. It is a mathematical number by getting one figure dividing by the other figure. It is in fraction also. It is in percentage. Got it? Sometimes you will get in percentage. It is given in proportion. It is in fraction. Got it? This is called ratios. It is a mathematical number. So just they are mentioned here. Just see. Ratio is calculated by dividing one figure by the other figure. It may be expressed in any of three ways: times, proportion, percentage, according to the convenience of or suitability. Got it? This is called ratios. Got it? Now we'll see objectives of ratio analysis. So in that objectives, first there are two types of, means They are given many more here, near about 11 objectives is given. 11 objectives are there. But point is not there. You just note down that point. First will be, just see first. So they are given to you, following are the important objectives of ratio analysis. In that first will be to provide necessary basis for inter-firm comparison as well as intra-firm comparison. The objectives means to ascertain the inter-firm comparison and intra-firm comparison.
What interfere?
Interfirm means making relations, firm A and firm B,
Uh-huh.
like this.
Inter.
So suppose you have got one company, myself as a got a company. Your current ratio is 3:1, which is nice one. Standard ratio 2:1. But my company is there, but my current ratio is 1.5:1, which is not standard. So go on making comparison. To making the comparison, make ascertain ratio analysis. Leveling, ascertaining. Go on making comparison. So you are superior than me like this because ratio is more. Comparatively, your ratio is quite satisfactory because if you go to the bank and ask money, immediately they will give to you because you are quite satisfactory ratio there. But my ratio is not okay because there is no feasibility to take the payment when I take the loan. So there must be feasibility to making the repayment. Correct? Therefore, for this they can make the comparison. So then which types of comparison given? Between one company to its competitors. One company and another competitor company. Second, between one company and best company of the industries. So just see, this is the best company in the industry. We compare to that best company. Suppose you have got a best company, you have got 4:1 ratio. Mine is 2:1. As compared to the best company, my ratio is reduced, not quite satisfactory, not as compared to the standard ratio. So by getting this comparison, they make these things. Then next will be between one company and the average performance of an industry. Then average company is there. So this is called inter-firm comparison. Then next is intra-firm comparison. Just see next page. So inter-period comparison. What is that inter-period comparison? Between 2 years.
This is different.
Huh?
Different.
Different years. So for our company only, inter-firm comparison, inter means last year in current years, like this. See, for example, this is 22, this is 23. I compare with this between these 2 years, with 2 years comparison. What is the last year gross profit in this year? Suppose last year gross profit is 30%. In this profit 10%.
1%.
It is 20% less. Not good. Gross profit is less as compared to the previous year. Correct, no? So 2 years. Like this, 20% gross profit less. Suppose net profit is here 25%. If you get here 35% net profit, it is good. Increase by 10% net profit. Got it? Like this comparison. Then next year, between 2 years, between 2 months. So years, month, and days also they can calculation. Just see, between 2 years, between 2 months, between 2 quarters, 3 months. 3 months means quarter. There are 4 quarters in a year. Correct? Quarters means 3 months, period of 3 months. Correct? 3 months means in a, there are 4 quarters. 3 into 4, 12 months, like this. So means comparison made. Then between X month of the current year and X month of the previous year. So say for example, last year January and last year, previous year January, current year January. Correct? Comparison. So for this ratio analysis is done. These are objectives. Intention, motto for preparation of this. Then third they are given to you. Decision making. Decision making. Write down here. Note down. Decision making. Otherwise, you can write down here. Decision making. Yes. Okay. Now we have to explain this by taking the same sentence there. So just see how to write in the paper in the examination. They will give to you 20 pages paper only. 20 pages paper. In that 20 pages, you have to do all these things. No supplement. No extra supplement will be given. Therefore, if they ask there, you write in one page like this for 5 marks.
Decision making.
Decision making. Then what you have to write there? Decision making. It helps in providing a part of information needed in the procedure of decision making. So it helps you to take the decision making. These are the first objectives. Then second they are given, third is given to you. Focus on facts. Focus on facts. Then you write there to focus on facts on comparative basis and facilitates drawing of conclusion relating to the performance of the firm. These are the things there. Then third, fifth will be there, performance of the firm. Performance. To evaluate the performance of the firm, determining the important aspect of the business such as liquidity, solvency, operational efficiency, overall profitability, and capital gearing, etc. So they can ascertain the performance. How much profitability is there? How much solvency is there? How much capital gearing is there? How much liquidity is there? So like that. So it can give the performance. Then six is throw light to the degree of efficiency. Degree of efficiency. How this is efficient? How this efficient? How it is feasible? So throw a light to the efficiency. They can the objective of this thing. They are given to you here. The to throw the light of degree of efficiency in the management and effectiveness of the utilization of its assets. Of its assets. The next number is given to you. Then they are given to you effective control. To provide the way of effective control is the requirement of the objectives. This is the ratio analysis. Then discharging its basic functions, because the management has been discharging some basic functions are there. And but what is the basic functions there for every management? That is planning, controlling, motivating. These are the basic functions, correct? Functions performed by the management. So the basic functions will be given to you. That is planning, coordinating, communicating, controlling, and forecasting. So these are the performing the basic function. They can the objective of this is to performing the basic functions. That is planning, controlling, motivating, coordinating, all these functions, communicating, controlling, like this. Then next will be they are given to you to promote coordination among the departments or the staff. So they can promote the cooperation to the department. There must be correlations, because in management there are 3 levels. In management 3 levels are there. First is top level, then middle level, and lower level. On the top level, all the bosses are on the top level. Middle level, all the staff means the executives will be there, and lower level will be all the workers will be there. Correct? So there must be proper communication to making the coordination between all levels. The objective is to making the communication and controlling to all the levels. Therefore, coordination is the objectives. Then point out the financial condition. So the objective is to point out the financial condition, whether it is weak, whether it is strong, or whether it is weak, like this. So just see, they are given. So here they are given to you to point out the financial condition of the business, whether it is very strong, they questionable, or poor, or unable to the management to take the necessary steps. Then if it is very poor, you have to take some necessary step. Necessary steps will be taken like this. And the last number will be index efficiency. Index efficiency. So it acts as an index efficiency of the enterprises. So these are the objectives. Now we'll see the advantages. Advantages. All these questions are following the examination. Huh? This is also following there. Now we'll see the advantages. So this is objectives. On this ground is completed. Objectives. Objectives. and advantages. Advantages, then disadvantages. Disadvantages. Disadvantages means drawbacks, limitations, objectives. Now we'll see. Objectives is completed. Advantages. The first and foremost advantage is usually guide to the management. Ratio analysis is guide to the management. Suppose current ratio, liquid ratio is quite satisfactory, is guide whether to continue or not to continue. It gives the guidelines to the management. Ratio analysis gives the guide. So they are given to you. It guides to the management in informing the future planning and policies. So for the future planning and policies, it can guide to the management. First advantage. Second advantage is throw a light of efficiency. So there ratio analysis throw a light of efficiency, whether that firm is efficient or not. So to ascertainment of the efficiency of the organization or the business, it throws a light. Then third number is given to you, comparison. So here with the help of ratio analysis, they can go on making inter-firm comparison and intra-firm comparison. Inter-firm means other companies, competitive companies, and intra-firm means so quarterly, yearly, then monthly also comparison made. So it can help you to, like this. The next will be effective cost control. So ratio analysis is a very effective cost control tools. It is a tool of effective cost controls. Then third number is, then next number is there, greater clarity. It provides a greater clarity, perspectives or meaning data and bring out the information and not otherwise apparent. So it provides the clear clarity ideas regarding organizations. The next is profitability. It measures the profitability and solvency of the companies. Profitability, how much profitable, whether that company is profitable or not, and how is whether it is solvency or not solvent, like that. It diagnoses to you. It measures the profitability and solvency of the concerns. And G number diagnoses to you, monetary figures. So it permits the monetary figures many digits and consider 2 or 3 digits, which enhances the managerial efficiency. So by ascertaining, by making division, it gets given to you many more digits. So if you divide, it will get there 1.000 like that, up to 12 points. But you take there 2 or 3 digits only. Only 2-3 digits you can take into consideration there. The next is helps in investment decision. So it can help, the ratio analysis helps the management to make to investment or not to investment, or make to investment or not to investment, or invest the money by these things. So these are the advantages. Now we'll see the limitations. Limitations. First will be, that is lack of standards. So it lacks the standard value of ratios, therefore scientific analysis is not possible. Because there are some deficiency remains on the ratios. Therefore, as it is not given the scientific analysis, it is scientifically, you cannot give the good result there scientifically. Drawbacks. Then fails to throw the light efficiency. So means ratio analysis fails to throw the light to ascertainment of efficiency of the organization. Then next number diagrams to you. So gives only the relationship between variable and actual magnitude. So ratio analysis only gives the relationship between actual and magnitude, means actual relationship. So therefore different variables and actual magnitude are not shown through ratio analysis. Limitations. Then derived from financial statement. So ratio analysis is derived from the financial statement and naturally reflect their drawbacks. So naturally they can draw all this ratio from the financial statement. By means of trading account, profit and loss account, balance sheet, they can ascertain. But naturally this condition is not like that. It is derived from the all financial statement. If you are not prepared the financial statement, you cannot prepare the ratios. You can't prepare the ratios. You cannot assert the ratios there. Then last number, market changes. It does not take into consideration the market changes. Ratio analysis cannot make the change in the market changes because there are ups and downs. Inflation and deflation will be there in the markets. So that deflation, inflation, market changes are there. You cannot take into consideration. Not taken consideration. Limitation. And fails to indicate immediately mistake and errors, because there are some mistakes and errors, lies, because faulty you have done this by taking faulty figure you can ascertain the ratios, so it cannot ascertain there are some remaining mistakes and errors, so like that they can ascertain the ratios also by faulty errors, mean faulty ratios can be ascertained. So these are the limitations. So 1 2 3 4 5 6 7 7 in numbers. So these are the now we'll see the classification of ratios. There are three classification of ratios. Number one will be the balance sheet ratios. In that balance sheet ratios, two ratios are very important ratios. First is current ratio. How to ascertain the current ratio? Current assets upon current liabilities is current ratio, always 2:1. Always 2:1. Then another will be the income statement ratio. Income statement ratio will be gross profit, net profit ratio, operating ratio, correct? Capital gearing ratio, all these ratio coming, that is called income statement, trading profit and loss account, trading profit and loss account ratios, income statement. Got it? So like that. Then it is third number is mixed ratio. It is combination of both. Means they will give you trading profit and loss account and balance sheet, and some mixed ratio they can ask to you. That is capital gearing ratio, capital employed ratio, capital return, capital on return ratio. So such types of other ratios are given. So that is called here the classification. So now remember this. Now just we'll see here the different ratio. It is just
Type of ratio.
types of ratio. So here don't go to this thing, just lengthy things given. Now just this is the very important thing. Page number C. Page 139.
Formula.
Correct? Formulas. Very simple. Just see. Now they can ask to you, just see. I told to you what is the things and matter asked in the examination. Theoretical question, one problem. Correct? Advantages, disadvantages, objectives. Then one problem will be there. Correct? In that problem, calculate current ratio, calculate liquid ratio, operating ratio, net profit ratio, gross profit ratio, sales turnover ratio, like that they will give you. So these are the various ratios. Got it? You read this in home. So most of this ratio I am just referring to you. First is the current ratio, 100% guarantee. Right mark this. Padnarans. The second is
Net working capital.
net working capital पडणार, then quick ratio पडणार, cash position ratio. So मग ते काय सांगता येत नाही. Net profit ratio पडणार, gross profit ratio. Where is that net profit, gross profit, ascertain net profit, gross profit ratio,
Net profit.
net gross profit, operating ratio,
Operating ratio. Gross.
correct?
Return on excel.
Turnover ratio also, it is very important.
Particular.
Particular, just see. Okay. Now you got this thing. I will not explain this thing. So just only explanation of 2 points here. Very important. Current assets upon current liabilities. Current assets means cash in hand, cash at bank, sundry debtors, bills receivable, prepaid expenses, current assets. Then divided by current liabilities. Bills payable, sundry creditors, bank overdraft, current liabilities. Current assets upon current liabilities, current ratio 2:1. Liquid ratio. Liquid assets upon liquid liabilities. What is liquid asset? Current assets minus stock minus prepayment. Liquid asset. Then current liabilities is current liabilities minus liquid liability means current liabilities minus bank overdraft. Then it is 1:1. Always 1:1. Current ratio 2:1. Liquid ratio 1:1. Now we'll see one problem here. Just we'll see one problem which comes to you. See page number. Problem number 2. Sorry, for problem 1 you see first. Page number 140. Page number 140. This. So like this they will give to you. It is asked for 5 marks. Asking 4 to 5 ratios. 1 mark, 1 ratio for 1 mark for 1 ratio. Okay. So they will give to you like this liability balance sheet will be given. Yes, yes. Just see. So just see. From the following balance sheet of Ashoka Limited, Akola, calculate the following ratios: current ratios, liquid ratios, absolute liquid ratios, current asset to fixed ratios, debt equity ratios, proprietary ratios, capital gearing ratios, and fixed asset ratios. The balance sheet now. So the balance sheet is given to equity share, capital, preference share, capital, general reserve, profit and loss, provision for taxation, everything is given, and goodwill, everything is given. Then first will be current assets. So what is the current assets? First you have to write there. Current assets is equal to current assets upon current liabilities. Then from this, which is the current asset? Just we'll see. Which is the current assets from these things? Inventories. Inventories, bills receivable, sundry debtors, bank, and investment also short. So these are all current assets. Got it? Just see. Current asset here. Here assets are here. No. So just see. First is inventories, bills receivable, sundry debtors, bank, and investment short it is. So you can take this total. It will be current assets. Then current liabilities. Current liabilities will be, just see here, current liabilities will be 1,24,000. Bills payable, bank overdraft, sundry creditors, and provision for taxation. These are the current liabilities. Got it? Then formula, current assets upon current liabilities. So 10 lakh divided by 4 lakh. You will get 2.5 is to 1. Is to 1 you have to write there. If you divide it by this, you will get 2.5. Is to 1 you are right. Got it? Then just see. Next will be current liabilities they ask to you. Liquid ratio. What is liquid ratio? Liquid assets upon liquid liabilities. Liquid liabilities. Liquid ratio. Then what is, just see, liquid asset means current assets minus inventories minus prepayment. Current assets. Assets, prepayment. Prepaid expenses. From that, and current liability minus bank overdraft is current liability or quick liability. It is also called quick liability. Just see here. They are given to you cash at bank, short-term investment, and current liabilities. They are given to us 4 lakh is to 3 lakh 80,000. 4 lakh is to 3 lakh 80,000. You will get 1.05 is to 1. See, liquid assets upon liquid liability is liquid ratio. Liquid ratio. Correct. Then absolute liquid ratio formula. Absolute liquid ratio formula is cash plus cash at bank, short term minus investment divided by current liabilities. So from this you have to ascertain. You will get there 2,20,000 divided by 4 lakh. It is 0.55 is to 1. 0.55 is to 1. Then current assets to fixed asset. Current assets total you got it here already. What is the current asset total? 10 lakh. 10 lakh. Then fixed asset total, just see. What is the fixed asset here? Just see. Goodwill, 55 lakh. Plant and machinery, 6 lakh. Land and building, 7 lakh. Furniture, 1 lakh. Means how much it is? 8, 6, 14 and 19 lakh. See just here. 19 lakh. Total. Fixed asset. 1, 2, 3, 4. These are the fixed asset. 1, 2, 3, 4. 19 it is coming. 19 lakh. So 10 lakh divided by 19 lakh, you will get there 0.5 to 6 is to 1. Is to 1. Correct? Divided. Always divided. You will get there. Then after that, they are goes to debt equity ratio. So here, long-term debt divided by shareholders fund. Long-term debts are 5 lakhs. Long-term debt means just 5 lakh. Which is that 5 lakh long-term debts? Here, just if you see the long-term debts will be 5 lakh. Here, 12% debenture. Just this is the long-term debt only. 5 lakh.
12%.
12% debenture. Then this divided by 10 lakh plus 5 lakh plus 1 lakh plus 4 lakh means this is equity shares. Equity share, preference share, this plus all these things you can debit it. 1, 2, 3, 4 just here for 10 lakh, 5 lakh, 1 lakh like this. So here equity share capital, then preference share capital, reserve surplus and loss. This is the profit and loss given. All these total is like this. Shareholders fund it is. Correct? So you'll get there 5 lakh divided by 20 lakh
0.25
is to 1. You will get there.
divided.
Divided. All is divided. You take your mobile, just will see, confirm. 5 lakh divided by 20 lakh. You do this. 5 lakh. 5 lakh divided by 5 lakh divided by 20 lakh.
Right.
You know just what to say. Shit that scares me, I should just walk.
Got it? 0.25. What is this? Just 0.25 is to 1. You write there.
How to write, sir?
You have to write all every time. Every time is to 1. Is to 1.
0.25.
Is to 1. Got it? Like this.